Professor Ian Plimer is with me. I've just put a call into Peter Switzer, the finance guru, and I'm quite sure the professor will have some interesting points to make as well. Peter, how are you?
I'm very good, Jeremy. How are you?
I'm fine. We haven't spoken for a long time. You've been well, I hope?
I certainly have.
Good. You've been away.
Yes, travelling Europe. Yeah. By the way, I guess you might not know, but nowadays, apart from all the stuff I do in the finance area, we also own Harper's Bazaar magazine and Esquire, as well as Men's and Women's Health. So
no, I didn't know that. No,
it's a fairly recent development, but I guess it's fair to say that my wife runs that side of the enterprise very successfully, and it means that occasionally we have to go overseas. And apart from doing research and reconnaissance on Maureen's behalf, I'm also a famous baggage handler. So
it always interests me when somebody who has a huge experience and a great knowledge of one particular thing and then goes off the reservation and does something completely different but exciting. It's kind of like a renewal, I suppose. Had you had any experience with magazines and publishing before?
Yeah, well, basically we've been doing business and finance magazines. Way back in the early 90s, we used to publish Australian Small Business Magazine for Federal Publishing, which was our initiation into the area. But about 10 or 12 years ago, we bought Rush magazine, which is an uber cool woman's magazine, which I'm sure you've never read, Jeremy, given the fact that I know you pretty well. But and my daughter-in-law, who is Jess Blanche, she's actually regarded as being ultra uber cool, though she'd probably kill me for saying something like that. But it's done very well. So we have had experience in that area. And really, you know yourself, you start off as a broadcaster, but you've become an entrepreneur. You learn how to do business, and if you learn how to do it successfully, the processes and the systems ultimately remain the same. You've got to have good systems, you've got to have good people, and you have to practice and get better at leadership. And I think that's the key to any business.
I think you were probably the first finance guru, and a lot have popped up since you arrived. I just wonder, is there a pecking order? How good are you? How good are they? Do you ever sit and listen to what they're saying and the advice they're giving and think, well, gee.
Well, I think I've always been prepared to listen to others and to critically examine what they're saying. And that goes back to my old academic days, because I started off as an economics lecturer at the University of New South Wales, and something that was always beneficial but often disconcerting was to maybe read a paper to your colleagues who have totally different points of view. Their ego always gets in their way. But the end result, even though you might have copped unfair criticism and uninformed criticism, you invariably did learn something either about them or about yourself. As a consequence, I think your views have improved. And when it comes to finance, particularly the stock market, I'm always open to thinking and listening other people's points of view on the basis that you can be distracted by your own bias, and I do tend to be very positive and optimistic about stocks, but I do know that's driven by the fact that markets usually go up 8 years out of 10, so I don't see any great reason to be over preoccupied in looking for the 2 years when the markets don't do well. But I am always on the lookout for that, because I will become more defensive if I think that's the sort of outcome that's likely, given my reading of the economic entrails.
Peter, being here with Jeremy, Les Ulliker speaking, and Professor Plimer, the Reserve Bank and the population of Australia and the government are just hell-bent always talking about interest rates and trying to drag interest rates down because of the housing crisis.
Yep.
Now, my view on that's somewhat different in that historically we have currently low interest rates. I mean, I'm from an era when we were paying the high teens, in fact, low 20% on bank overdraft. So I know what it's like to actually experience high interest rates, not what we have now, which is not high interest rates. My common belief is that the real problem is the cost of the stock to start with. I mean, here in Adelaide, what used to be a subdivided block with the new house on top, $500,000, is now currently, over 4 or 5 years gone to $1 million. So it's the cost of the stock. And as I explained to Jeremy the other day, looking at a National Bank template, that if you have 10%, $100,000 on $1 million property, and you have to pay back over 30 years, it costs you about $62,000 a year in principal and interest repayments, which is a full-time equivalent to a person working on $100,000 a year pre-tax. Yep. So anyone who needs to buy a property like that, like an entry level into a suburban area, you need dual income. And 2 good dual incomes to survive. So am I right? Is it actually the interest rate is the problem, or is it the cost of the stock to start with?
Without a doubt, the cost of the stock is the issue. And I remember when I was writing for The Australian, probably 5 or 6 years ago, I did that for about 15 years. I remember coming across work actually done in South Australia where they looked at the cost of a block, a new home, and a land package, and it was something like 30% of that, the value of that new home and land package, was government charges of all different levels, from local to state to federal. And I've then taken that and looked at other states, New South Wales, Queensland, Victoria, and it's pretty well the same. So at the core of our problem is excessive regulation, excessive taxing of developers and builders. But I also think there's excessive roadblocks in the way of people building stuff as well. And look, personally, I've been trying to create an office in Melbourne, in Albert Park, for the last 5 years. Now, COVID got in the way, but the local council then made us to resubmit the plans that they accepted before COVID because of the duration between accepting the plans and then COVID getting in the way and we're not starting. Now I've also discovered that in building a property in Melbourne, I have to, at my own expense, provide a building consultancy for my neighbours to make sure that what we're doing is not going to affect them. Now, in the good old days, a building inspector from the council would make sure that the builder didn't do anything to damage the properties of the adjoining properties of something's being built. It's just ridiculous. It's just gone madness. I think Victoria is famous for going mad, going on the madness side.
What would you do, Professor?
Well, can I just add to that? I'm a director of Roy Hill Holdings, one of the Hancock Group companies, and we built the Roy Hill mine in the Pilbara of Western Australia, and we needed approvals. And we needed approvals from local, state and federal government to build a mine in an iron ore mining province, in an iron ore mining state, in an iron ore mining country, and we needed 4,950 approvals. At the same time, we had debt finance of $7.2 billion and equity finance of $4 billion. And there were literally days in it as to whether we would get those approvals or not because of the delays and because of the constant change into the game. And we could have lost that whole project because of the regulatory process. Now, I have no problems with having approvals. I have no problems with obeying the law, but to have 4,950 approvals for our major income-earning businesses in Australia is just madness. Local government are doing the same, and I believe that we have a very large number of eminently unemployable people who we put into local, state and federal government to deal with these approvals. And associated with that is a lot of envy. So if you're a wealthy person or you're building a big mine, or in the case of Roy Hill, it was Gina Reinhardt, this is your way of expressing your envy. Slow down the project and even kill off the project. You have nothing to lose. And I think that was part of the decision that occurred with the Blaney Gold project. We certainly experienced it with Hancock in Western Australia. And this is why many companies in Australia might make their money in Australia but are looking at other jurisdictions because they are easier to work in.
Well, why is it that if you want a solar farm or you want a wind farm, you never have any problems?
And because that is the popular fad. And, of course, you're helping the environment by bulldozing down all these trees and killing all the wildlife and leaving concrete in the ground forever and leaving the bisphenol A chemical that comes out of the turbine blades in the soils. It's a banned chemical, yet it's used in the blades, and that's why we don't recycle the blades.
Would you be putting money, Peter, into alternative energy?
Look, to date, I haven't. Of course, the alternative energy, which I am actually toying with the idea of investing, is uranium, of course. And there is an increasing group of even green activists in other countries other than Australia that is actually admitting that that uranium may well be the best way of helping the environment, via nuclear power.
Yeah.
And I do know that the company Paladin has actually been a pretty good investment for our Switzer report, which we put out 2 or 3 times a week. I've got a very good chartist by the name of Mike Gable from Female Equities, and on a number of occasions, whenever that share price gets very low, he often comes in and says it's just looking very attractive. He's been right every time, and I think it's going to take some time for the world to get on board, but I think the world will eventually admit that this is going to be a very important part of reducing the pollution associated with many of the production processes, particularly the generation of power. But it's going to take some time.
Yeah. Well, I'm a great uranium buff. We have in Australia thousands of years of coal, thousands of years of gas, and millions of years of uranium. If you use uranium all your life for your power needs, you will fill half a Coke can of spent fuel. And with the modern fast breeder reactors, you can reuse that fuel. Paladin, of course, are working in a wonderful jurisdiction, and that's Namibia. I have been there, and there's a very big uranium mine in Namibia. And that uranium mine in Namibia only started when we killed off uranium in Australia, and we opened the window for someone else. So it's a great commodity. I'm a geologist. We have great geological terrains in Australia for uranium deposits, which are high grade and very large deposits. And some of these deposits are still sitting in the ground, and they've been there for a long time. So I'm very bullish on uranium. A country like Australia has one small reactor at Lucas Heights. A country like Croatia has 19 reactors. I mean, where have we gone wrong?
Peter, last question. Do you know a billionaire by the name? He's apparently a hedge fund manager. His name is John Paulson.
Yep.
John Paulson says here, the Paulson and Company founder, he says here, I expect the stock market to crash and we will go into recession if Kamala Harris wins the election. He goes on to say, it depends on the policy, but if Harris is elected, I will immediately pull my money from the market. I'll go into cash and I'll go into gold because I think the uncertainty regarding the plans they've outlined could create a lot of uncertainty in the markets and likely lower the markets suddenly. What would do you have any? Does that make any sense to you?
Look, Paulson's a smart guy, as is George Soros and Ray Dalio. These are all really smart guys. And because they are smart, I watch, I listen, I remember what they've said in the past. Paulson doesn't always get it right, so I've got to throw that in. And let me throw this in, and he might regard this as being unfair, but he wouldn't know Rene Rivkin. But I always remember Rene in 1989, 88 after the 87 crash. I interviewed Rene, and he said, we will be going into recession, house prices will plummet, and he put a whole lot in. Of course, in 1990, he got it right. I went back to him and I interviewed him, reminding him he was wrong in 88, 89. He says, but I didn't tell you then that it would happen. So in his great Russian-Australian voice. So I think a recession is bound to happen in the US. Whether it happens straight after Kamala Harris wins, I doubt that very much. I personally have had all my financial planning clients very heavily exposed to the market for the last 2 years, and this year I'm staggered that they've made 17 to 21%, and that I think is fantastic. I've said to all of them, I will go more defensive in the middle of 2025. And I'll probably be going too early, but somewhere I think in 2026, given that the growth of the US stock market's been quite exceptional, artificial intelligence has driven it, the expectation of lower interest rates, all that will work through, and we will, I think, ultimately see a recession in the US. It will be under even under Trump, it could happen. So I think the bottom line is Paulson will eventually be right, but I don't think it will happen in 2025.
Great to talk to you, Peter. How can we plug into your newsletter and podcast and all the other things that you do?
Okay, so every day I write something between the hours of 5:30 and 7:30. I'm on 2GB with Ben Fordham in Sydney and Peter Fagan in 4BC. But if you go to switzer.com.au, that's where you get my daily readings. And if you want someone to give you some stock market analysis, I never call it tips, but stock market analysis. And I have some of the best people in this country. You might remember Tony Featherstone from the Australian Financial Review.
Oh, yes.
Tony writes with me, so does James Dunn, and we do analysis of companies, and that's the Switzer Report. It's about $400 a year, but it's the best. Oh, well, I won't talk.
No, God bless you. That's wonderful. Thank you. Thank you, Peter. Peter Switzer, ladies and gentlemen. Thanks for talking with us.